Markets don't always reverse because sellers suddenly become stronger. They reverse because buyers gradually becomes weaker. By the end of this video, you will realize why I just made that claim I made in the intro a few seconds ago. This topic has been a problem to so many traders. I feel so excited I'm going on this journey with you guys. So with that being said, let's get about it, guys. So take a look at this chart. Of course, you can see that the market has obviously been trending downward. Then at some point, it turns around and start doing this, and then eventually start going upward. So this was a reprice in. The market was coming down. It went up, repriced in, came down again, went up, repriced in, taking more traders into the market, came down again, went up, repricing, came down again, went up, repricing, went up again, repricing. So bringing in so many traders into this market at this particular movement, then at this point right here, at this point, the market might have taken enough order and then decided to do what? Turn around and start going upward. So we are going to examine and know what happened at this point, what happened at this area that caused this market to reverse, or what was even happening throughout the trend that led to this reversal right here. When traders see a market reverse, they usually look for a reason. Maybe there was a major economic announcement.
I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy.
You might even hear some people say the market was even manipulated.
Hey Ma, I've been looking at the chart currently. Looks like the market is kind of reversing. What do you think?
Maybe the traders are taking profits.
And sometimes those things do matter, but they don't always explain the whole story. They tell you what happened. They might even tell you what triggered the move, but they don't necessarily explain why the market was ready to reverse. To understand that, we have to go back to something much simpler: the battle between buyers and sellers. At its core, every financial market is a constant negotiation. Buyers want to buy at a best possible price. Sellers want to sell at the best possible price. But as long as buyers remain aggressively enough to keep accepting higher prices, the market can continue moving higher. That's how trend survives anyway. But here's the important part. A trend doesn't need to have a massive amount of selling to end. It simply needs buyers to become less aggressive. And this is where the story begins to change. In 2022, the Federal Reserve, which is a monetary body in the US, was actively raising their rate to fight high inflation that was wiping out the US economy.
Good afternoon. I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so.
Investors started flowing into safe haven pairs, coupled with the European energy crisis and the fear of European recession. All of this add together contributed to a massive pressure on Euro USD. And this is where this investigation became more interesting. By September 8, 2022, the European Central Bank raised their interest rate by 75 basic points. But still, Euro USD continued falling. So the big question is, if the European Central Bank was tightening policy, why wasn't the euro immediately recovering? And then on September 28th, Euro USD reached roughly 0.9535. The euro had lost almost 20% against the dollar from its high the previous year. But this is where the story begins to change. The euro faced enormous pressure because Europe faced a possibility of severe power shortage. But as we move towards the end of 2022, Europe had made significant progress in filling gas storage facilities and securing alternative supplies. The extreme fear surrounding Europe's winter energy situation began to ease. That mattered because the market had already been pricing in the possibility of a very severe European economic shock. So the narrative began to change. Maybe Europe is heading towards an energy catastrophe too. The situation may be bad, but may not be as catastrophic as feared. The European Central Bank was no longer sitting at the sideline. They were actively increasing their interest rate as inflation was going higher.
Good afternoon to all of you, particularly those that I can see in the room. I hope you had a good break. So, today the Vice President and I welcome you to our press conference. The Governing Council today decided to raise the three key ECB interest rates by 75 basis points.
At this point, the gap between the Federal Reserve and the European Central Bank was still very important. But the euro interest rate story was no longer moving in only one direction. And here came what changed everything. On November 10th, US inflation came in at 7.7%, lower than the previous month 8.2%. And suddenly, the market had a reason to question how aggressively the Federal Reserve would need to keep raising their rate to curtail this. And as expectation for the dollar next move changed, Euro USD exploded to the upside. Now, this is the part I think a lot of traders miss or even overcomplicate it completely. Markets don't always reverse because sellers suddenly become stronger. They reverse because buyers gradually becomes weaker. That's a very different way of looking at the market anyways. The reversal you see on the chart is often just the final result. The real battle started earlier. The buying pressure was slowly fading. The market was becoming more vulnerable. And eventually, something came along that was strong enough to expose that weakness. That something could be news, an economic report, a central bank decision, or simply a large order hitting the market at the right time. But the trigger isn't always the real cause anyways. The market was already changing underneath. So let's play a little game. What have you learned from this particular video that we've just made? This journey that we've gone through? Alright, okay. I'll go first. So what I've learned from this discovery is there is a reason behind every movement in the market. There's a reason behind the market decide to go up. And there's also a reason why the market actually decide to go down. So after a particular news event is released, or before that news event is even released, there are actual human beings behind the scene facilitating that. There is somebody saying, I want to buy because I believe this is going to happen. And there's somebody also saying, I want to sell because I believe this is going to happen. But it's just that majority of them might not even be in the same place to make these decisions. So, in the world of technology today, they have made it possible for us as traders to be able to, if not all, but access a little bit of these decisions. So, our ability to be able to know these decisions they are about to take and know that, okay, if I go against this decision, it might affect me in this way or this way, makes you a better trader. So that's what I've learned from this particular documentary that we've just gone through. So it's over to you now. All right. So what have you learned from this particular journey we've just gone through? All right, so just drop it in the comment section. All right, just drop it in the comment section.